This is the Infrastructure Matters podcast, brought to you by the Futurum Group. We explore the latest developments in hybrid cloud computing and the technology that underpins it. In each episode, we'll dive deep into the latest trends and technologies that are shaping the hybrid cloud computing landscape. The Infrastructure Matters podcast is for information and entertainment purposes only. Please do not take anything reflected in this show as investment advice. Now, your co-hosts, Stephen Dickens, Camberley Bates, and Krista Macomber of the Futurum Group.
Hello, everyone, and welcome to this next episode of Infrastructure Matters. I'm Krista Macomber, and I'm joined by both of my co-hosts this week, both Camberley Bates and Steve Dickens. Welcome, Camberley and Stephen.
Hey, 2/3 of us got the memo about what to wear.
I know. We'll have to coordinate next week.
I've even got my future mug this week in front of me.
There you go.
Yeah, I have VMware this week.
That's probably going to be worthwhile given the topics this week. We're going to talk about VMware a lot. So
Definitely. Preview of coming attractions for sure. So Stephen, I know we missed you last week because you were sick. Hopefully you're starting to feel a little better.
I sound a little bit like Barry White, but the voice is coming back.
Not a bad thing, right?
Maybe that's a good thing. Maybe that's a bad thing. I mean, I don't know.
Well, just to kind of jump into it, I know we kind of alluded to it a little bit when I kind of brought up my VMware bottle here, but I know this week we did have a couple of pretty big sessions with Broadcom, some kind of touching on regarding the VMware acquisition, and just kind of a number of topics coming out of that announcement. So I guess maybe Camberley, do you want to kind of kick us off with some of your impressions? And I'm sure Stephen and myself will have color to add too.
So we've got a couple of pieces coming out on it as well. So, but I'll highlight what I talked about. So what happened this week is Broadcom hosted a virtual analyst meeting. It was keynoted by Hock Tan. Excellent job by him in terms of two things. One is his very directness about where he's going and the strategic initiatives that they're really focused on. And secondly, was also his Q&A. I think it was almost a 45-minute Q&A, probably not quite that long, but he was just taking whatever we were throwing at him, and it was a complete open mic. And when that happens, the companies that do that, you know that they're not hiding. They're saying, here we are, this is what we're doing, this is our strategy, and we're going for it. And the thing that I was most impressed by with him is the focus that they have. My compatriot here has worked with Broadcom for a long time. I have less. So I was extremely impressed. And I know there's a lot of consternation about him, Hock Tan, coming in and cutting costs, etc. But here's what he said. He said that super engineering, super technology, not organized. And that they had all these divisions going after all these other pieces of it, and it was not within a single place. And what he looked at, he said the strategy idea of this virtualizing the stack basically brings out so much cost benefits to the market space, and it needs to stay focused within that space. And that's why you've seen them come together and put VCF and say, here's the full stack, buy into it. It also simplifies how they go to market. So it significantly reduces the work that has to happen, both from an engineering standpoint. When you've got a full stack that you're going to test there, that ends up reducing your cost over there in terms of your support cycle, as well as it reduces the level of effort and all the negotiations that have to happen if you have 10,000 SKUs to put a deal together for a customer. It just makes it simpler, and especially for a product that is considered a very, very mature product in the market space and where it's space. And I will stop there because I've just been chatting for 2 minutes straight.
Yeah, I'd echo your comments 100%. I mean, I think what we're going to get, we've been tracking VMware for a while, pre-acquisition and post. We went and did a fantastic analyst session, whilst you guys were sort of coming on board as evaluator group. What was that, 12 months ago, maybe even? And it was just hard to get the vision. We sit here, we get briefed, we have the opportunity to read a lot and get access to product management. And, if the analysts are confused, then customers are going to be confused. I think what I took away from this is radical simplicity is going to be the new Broadcom VMware structure. A lot of middle management have gone. As Camberley mentioned, we track large parts of the VMware and Broadcom software business. It's a very, very flat structure. Not a lot of kind of VPs with titles that you don't know what they do. Very structured, very direct. Hock is very, very, very hands-on and engaged. So I think you're going to see a simplicity of the management structure. You're going to see a lot of that kind of middle management bloat removed that was there. I mean, VMware was a 38,000 person organization, and given their revenue and their portfolio, you could argue that they were running a little hot on the headcount.
Mhm.
So I think radical simplicity. I think you're going to see that go-to-market structure. Broadcom does a really good job of focusing on its top 600 clients and building deep and meaningful relationships with them. You're going to see that. One thing that came away from me was that all of the current VMware partners have been invited to be part of the program. Now, the tiers and how that rolls out over time and how they recertify, a lot of simplicities come through. So I think the way I'd summarize it, all of the bad news has been put out into the market all in one go, which I think is a good strategy. They've decided to rip the Band-Aid off.
Band-Aid off. This is
Rip the Band-Aid off, be completely transparent, get all of the messaging, product, go to market, headcount reductions, get it all out into the market. I expect we'll see a bit more communication from Broadcom over the next 2 or 3 months, and then it'll just be ruthless execution from here on in.
So to the IT end user, or the CIOs, I should say, Hock Tan is basically saying he's focused on 3 areas that they have told him they're keenly focused on: resiliency and security. How that will translate out in the systems will be some looking at where the exposures are and all that kind of stuff, but also how the full stack is developed and releasing the full stack together, as opposed to having vCN come out 1 month and vSphere another month and NSX another month. So there's this full stack integration, as well as getting a lifecycle management capability within that full stack. Developer efficiency, which is going to talk into more of what's going on with the Tanzu side and focusing on that area. So expect to see the focus on Kubernetes. We talked here on the podcast for the last year, saying it's highly likely that Tanzu would have got jettisoned because of its immaturity 2 years ago, because it's taken so long to buy the company. Tanzu has had an opportunity to mature, and so it's potentially it's going to be a strong, viable player behind Red Hat and SUSE. So we'll see if he puts all that engineering in there to make that happen. The third area is infrastructure efficiency, and that's getting back to the lifecycle management and all the pieces that he's trying to do in terms of bring offerings to the market, that's the next thing. Actually, there was another announcement this week that was with Google that has to do with their subscription licensing. So it's kind of cool. You want to take that off, one of you guys, or?
Well, yeah, everybody's gone up in arms around a change to the licensing model. To me, that's a complete nothing burger. Everybody's got subscription licensing models and has had for years. I mean, the way that they positioned it, I kind of agree with. We're kind of the last people to make this shift. So yes, it's a change. Yes, it's a change to a licensing model. That's going to impact tens of thousands of clients. But it's not anything. They're not going first. Microsoft's been there, IBM's been there, Oracle's been there. Everybody's decided to go to these subscription type models rather than perpetual licensing. So I think it's generally a nothing burger. It's just people reacting to change.
And I think that there's some reality to it, though. I think when you had 10,000 SKUs or how many SKUs they had, um, you have the ability to kind of pick and choose and figure out how
Mm-hmm.
how to game the system, if you will. And not that they were gaming the system, but you kind of look at how do you optimize your licensing process in there, and that no longer is going to play out here. You got two SKUs, or you probably have a few more than that, but you more or less have two SKUs and a few more on top of it. And it's kind of like, okay, so all that kind of licensing manipulation goes away. And so this is what I suspect, because I haven't gone through a licensing process, is what's happening. But the other thing that they did announce, which will be a great advantage to the companies, is portability. And
Mm-hmm.
that is going to be, so they had their first cloud announce it with them, which is Google. So license portability wherever your license is. So it's just, we don't, basically they're taking the right thought process like NetApp has. We don't care where you reside as long as you reside on us. So, and the cloud and Google's got a real, purpose to be able to do that because they're the third cloud. So of course they're going to be the first ones out, because I'd love for people to kind of port their stuff to them. So I'll stop there.
Yeah, what's your perspective, Krista? I mean, you track these guys slightly differently. What's your angle on this?
Yeah, I think, circling back to kind of the Broadcom AR summit, I think just my commentary is just going to be, I'm certainly excited to see what they do with, as Camberley mentioned, kind of one of the key pillars of focus being cyber resiliency. I know
Mm-hmm.
we've done some work with them kind of regarding their cloud DR offering, and I think there's some really great opportunity there because I think that's just a big use case for the cloud in general. I think it's going to be something that customers are looking to continue to expand, across their workloads, is to have kind of, flexible, cost efficient DR. And when we just think about that customer base that VMware has, I mean, these are critical workloads that customers are going to be looking to try to make sure that they have that cyber resiliency. So, I would say I'm really looking forward to kind of building on some of that work that we've done and really seeing what they do with, like we've been talking about, this focus on both efficiency and execution, and seeing kind of how that translates into kind of the R&D front, seeing how it possibly, translates hopefully into some cost savings for customers. And really also, I know kind of Stephen touched on just kind of those customer relationships, right? And kind of looking at how, because when we think about cybersecurity and cyber resiliency, I would say more and more we are needing a bit of kind of a higher touch model, just because attack vectors are changing. Each industry, each company is a little bit unique in terms of what they really need. So I think that's really going to be needed from that standpoint. So a little bit of kind of a few thoughts there, but those were some of my
Yeah.
takeaways.
I mean, maybe just to sort of bring it home, we had a briefing with one of the vendors. I won't mention their name, but positioning some alternatives. And I came away from that briefing this was around the core virtualization stack. I came away from that briefing thinking VMware's had a lock on this market for 20 years. And really, people haven't innovated. There's KVM out there. There's some of the stuff that the Linux vendors do. Yes, obviously Microsoft's got Hyper-V. But if you're looking at that virtualization stack and the tooling that goes around it, largely VMware's had this market to themselves. So whilst some of these vendors smell blood in the water and see a inflection point and see a lot of sort of clickbait from the mainstream tech media and in sort of negative attack headlines, I think if we take a 6 to 9 month view of this, not a 6 to 9 day view of this, I think CIOs are going to look at the alternatives and they're going to be, okay, this is a massive undertaking for me to retool a foundational layer of my technology stack. What do I really get at the end? Yeah, I changed the vendor and I maybe got a worse outcome. Do I need to do that when I've got to roll out AI and I've got cyber and I've got line of business sort of applications and I've got 100 other things to do as a CIO? do I want to get into the guts of my virtualization and management stack? I don't see it. I don't see it.
What I do see them doing is they'll stand up their Kubernetes stack separately. That the new
That's a risk for sure.
So the new ones are being developed over there on an independent bare metal stack, and we are seeing those offerings coming out into the market more so than they were before. It was easier to put Red Hat OpenShift on VMware. It's still a little difficult, but it's gotten a whole lot better. It's gotten a whole lot better.
That's the opportunity and the risk for VMware for sure, that a new stack gets created alongside.
Which kind of brings to another topic that we had, which is Dell focusing on the Apex offerings and the cloud platform offerings, which is what's that bringing? Is bringing that simplicity kind of to the integrated stacks. And if with others doing the same thing, they will be offerings that potentially are better, a lower level cost point than installing a Tanzu environment on VMware and continuing that environment. So,
yeah, it's going to be interesting with the likes of the TrueScales, the Apexes, the Green Lakes, what VMware does from a partnership strategy perspective. I think there is this came through in Hock Tan's comments as well, a huge focus on private cloud. We're starting to see the kind of workload placement decisions be more thought out and more thoughtful by enterprise architects. So I think that's an opportunity for them to lean into their partnerships with some of those on-prem providers and be able to sort of build out. I mean, we saw the Cloud Field Day stuff from Dell around Apex from a storage point of view, and there was a pretty much holistic sort of thought around how they're going to partner with VMware. So, but also with Red Hat as well. So it's going to be, the tension that you talked about of, do you build your new on-premise sort of infrastructure as a service stack with VMware? Do you build it with Red Hat? Those are some of the tension points, I think, going forward.
Absolutely. So Camberley, I know you kind of covered, the Dell announcement pretty closely. Just shifting gears a little bit, was there anything further that you wanted to kind of add there? I know this really kind of plays to your wheelhouse, being very partner-centric, looking at the channel.
Yeah. So this week, Dell had an analyst briefing on their new partner program. They started their fiscal year February 1. So as you typically see, February, that first month is when we start seeing all the partner programs updated and the new terms and conditions and what they're doing. So as most good partner programs do, it's not an overhaul, it's a tweak, because you've made as a partner, which I have been one of those in my past lives and owned a company that was a key partner. You live and breathe on, how those, if you will, compensation plans operate from your major vendors. And so what they did is a few tweaks, which were good ones, and had to do around the major ones were around Apex. And Apex being the as a service. For those who understand the partners, a partner moving from a CapEx to an as a service mode is difficult to do. It's a cash flow situation, and those companies are heavy duty cash flow. So if you go from a point where you're getting, your payment up front for a CapEx, your 20% payment or 15% payment for that CapEx, as opposed to having that spread out over 3 years or however that works, it's very difficult. So most companies have shifted to the point that when you sign a contract, the total contract value is paid out up front. And basically what they did is they're still doing that, but they also are recognizing that there's other bonus points and rebates and all that kind of stuff that go into cut. Sounds like the wind is picking up for both of you guys. I just heard that blow through.
It's brutal up here in the northeast.
It's that time of the year.
Yeah.
I heard that. That was not a howling dog, listeners.
No.
That's a howling wind.
Yeah.
So anyway, so what they did is they tweaked that so it plays in the same way, and if you're a partner, you're making money on not only the margin that you're getting, but also any new business that you bring in. You get bonus points on that, rebates on total contract values, etc. I think the other thing that they did with the partner program, they're going to be rolling out, is competencies for AI performance and skills. So they're going to help, which is really needed. I mean, I've worked with these partners. They're trying to hire people that have got AI skills, and there's just not enough people out there. So how do you raise your competency level, especially on the, what they're selling is that infrastructure sides of the house, and get their skills up to the point that they can advise. And that gives them, and I'm sure the other companies are doing this as well, but once they get those guys' skills up, then all of a sudden they're going to see movement of technology into those markets that they play in. So it's all goodness. The program, nothing radical, just good execution on Dell's part.
Yeah, and I think just looking at kind of, the channel in particular, I mean, the last several years with kind of the shift to cloud, to as a service, like we're talking about here, and now the introduction of AI as well, and kind of figuring out some of those new business models, it has not been an easy go. And again, Camberley, I know you track that space really closely. But, I think, like you mentioned, it's, kind of good to see that additional support from, one of these very large, very influential vendors in the space. So, yeah.
Right.
Yeah. So I know another announcement that we wanted to touch on was regarding Teradata. So Stephen, did you want to kind of kick us off with that?
Yeah, so I've been tracking these guys for a while and get briefed by the team there. They announced Q4 and full year 2023 earnings earlier this week. Stock market gave them a battering after the earnings because guidance wasn't where they wanted it to be. But I think, we're not equities analysts, we're tech analysts. Teradata's making a pivot. You could argue a little late, but they're making a pivot to the cloud with their Vantage offering. And they were talking about the particular highlight that stood out for me was cloud annual recurring revenue, up at 528 million for the fourth quarter. Now, if you took that as a standalone startup and said, hey, there's an analytics and AI company that's posting 528 million of ARR for a cloud-based workload, they'd get a fantastic valuation and everybody would think that was fantastic. So $500 million of ARR growing at 48%. That's the new story here for me. Cloud net expansion rate of 124%. They're making the pivot. Yes, they were later with Vantage than the Databricks and the snowflakes that are the darlings of the industry, but revenue up 4% in constant currency to just one over 1.8 billion. These are more solid numbers. A lot of big Fortune 500 companies use Teradata and have been using it as part of their analytics stack for decades. Yes, that's an on-premise model predominantly, but I think there's a pivot that they can make. And I think if they can make that transition and keep that customer base as they make the pivot to Vantage, I see Teradata coming out of this very well. Now, early days, with the Vantage piece, we're talking maybe 12 months, 18 months worth of migration over. But based on what they're saying at that 48% increase in their cloud ARR, I think the market gave them an unnecessary sort of whipping after the close. 20% drop is a big drop. Every time Tesla announces earnings, their stock drops between 9 and sort of 12%. So I often don't understand the stock market. Maybe that's a good thing that I don't.
Thank you, financial advisor.
This is certainly not financial advice, but
so this is something that I have found curious, and I probably need to sit down and talk to a financial person, somebody that watches the numbers. But it appears to me that as these companies go through this transition to ARR, and increasing the ARR. They have, and they do talk about it. I mean, I listened to Nutanix talk about it, Commvault talked about it, other companies have talked about it, that they have this period, and Pure talked about it. They have this period about 3 years where Pure hasn't, but they struggle with the financial guys loving them because their numbers don't look good because you're doing that transition that I talked about the channel partners making, right? It's a brutal time to do that change, going from where I'm getting, the money up front versus when I'm getting the money dribbled out to me. And then eventually you get, you've got this incredible thing that you wake up in the morning and you don't have to sell anything. Oh, yes, you do. But from an ARR standpoint, because you have it coming in. And so maybe they're going through that same transition that you go through. And during that time, for some reason, Wall Street just doesn't have the view on the 3-year cycle that it takes to get there.
Yeah, I mean, we've seen this with HPE, what are they, 4 years now into GreenLake?
Yes.
Yes. They're coming on the backside of that transition. You look at where Teradata are, they're on the front side of that transition. I think just a 20% stock. I mean, the market's crazy right now. Well, what are we up over 5,000 for the first time with kind of where we are? I mean, as I say, it's maybe good for our 401ks, but maybe I don't understand it. But as I say, I think posting a 48% ARR increase year on year is a good thing. How the market reacts negatively to that, I don't understand.
Okay.
Yeah, it'll be interesting to see. And I think, maybe starting with Stephen, from your perspective, I know we kind of talked a little bit about this, but looking ahead over the next, a year and a half or so, 2 years, thinking about Teradata specifically, what are some of the things that we should really be looking for in terms of that execution, right? They are in this period of transition, but what would be some of the additional proof points, whether it be things to think about potentially adding to the portfolio, whether it be maybe moves from a go-to-market perspective? I'd love any thoughts from that perspective.
Yeah, I mean, for me, it's really two things. It's the execution around Vantage. That is their guiding star. That is where they're moving with this cloud-based model. Customer adoption, big logos, making the transition to Vantage.
Mm-hmm.
Teradata's got a fantastic account base of Fortune 500 names. If we can see that those guys making the transition to Vantage, that's good. The other key piece would, how do they embrace AI?
Mm-hmm.
So how is their sort of, I don't want to say classic analytics type of model, but the sort of analytics, machine learning, largely data warehouse, how does that move into a kind of lakehouse AI style model? And how are they putting large language model kind of, and maybe some of the partnerships, Hugging Face, Google with Vertex, maybe some of those partnerships to apply them to those data stores that they've got. Those are the two things I'll be tracking. And then from an earnings point of view, is that cloud ARR continuing to increase?
That makes sense. All right. Well, I know we are already pushing the end of our time here. Stephen, Camberley, anything else from this past week that kind of jumped out to you that you wanted to add?
Did you go to the doctor and get the drugs, Steve, to get better?
I did. I went to the doctor's Wednesday.
Good.
Hopefully,
Good.
Hopefully with a long weekend and resting up, I'll be back and fully firing. But I mean,
we got to get the Infrastructure Matters team back healthy.
I know.
Keep the germs every Friday morning.
I know. I said it last week, Stephen. I said we're all virtual, but we all seem to be spreading this illness, and I don't know how.
There needs to be a Zoom patch for that so that you can't catch a virus down a Zoom.
It's a cyber problem. You take care of it, girl.
I will work on it.
That one's on you. Catching viruses down a Zoom.
Fair enough. I will work on that. All right. Well, Camberley and Stephen, a pleasure as always. Thank you so much. And thank you to everybody who joined us. Please make sure that you like and subscribe and all of those good things so that you don't miss any future updates. We're here recording every Friday. And with that, again, thank you. And we'll see you on the next episode.
All right. Thank you, guys.